Enterprise Finance Daily Banking, Risk, and Corporate Market Insights. August 10, 2026 edition. Tagline: Daily AI-powered insights for finance professionals, investors, and enterprise decision-makers. Disclaimer: news and commentary only. Not legal, financial, medical, or official advice. Anecdotal examples are informational and should not be treated as guidance. Headline: AI, capital flows, and digital finance. The banking transformation accelerates. 1. Corporate finance and banking. Banks race to reinvent growth engines. Why the next banking winners may look more like technology platforms than traditional lenders. Corporate banking strategy continues to shift away from simple balance sheet expansion and toward infrastructure ownership, platform partnerships, and technology-enabled operating models. Recent industry analysis highlights growing emphasis on governance, regulatory alignment, and scalable digital infrastructure instead of the disruption at all costs mindset that characterized earlier fintech cycles. Financial institutions are increasingly treating technology investment as a core strategic asset rather than a support function. Management teams are focusing on long-term resilience, operational efficiency, and customer trust. This trend reflects broader economic pressures that reward predictable earnings and durable business models. Large enterprises seeking financing are therefore encountering a banking sector that is becoming more data-centric, automated, and advisory-driven. Wolterskluwer. The emerging competitive landscape suggests that ownership of critical financial infrastructure may become more valuable than simply owning customer relationships. Institutions are pursuing acquisitions, strategic partnerships, and technology modernization initiatives to strengthen control over payment rails, lending systems, and compliance operations. Executives increasingly view operational discipline as a differentiator capable of attracting both investors and regulators. As economic uncertainty remains a factor in capital allocation decisions, firms capable of demonstrating stable governance frameworks appear positioned to command greater confidence. The transformation is pushing banks to operate with the precision of technology companies while maintaining the prudence expected of regulated financial institutions. Future earnings growth may depend as much on software architecture as on credit spreads. Wolterskluwer. Looking ahead, enterprise finance leaders are preparing for a world where banking services become deeply embedded within digital ecosystems. Treasury operations, liquidity management, and cross-border settlement functions are becoming increasingly automated. The institutions investing now in cloud infrastructure, intelligent analytics, and compliance automation may enjoy significant operational leverage over rivals. For corporate clients, the result could be faster decision cycles and more personalized financial services. While challenges remain, the sector narrative is increasingly one of disciplined modernization rather than disruption. There is growing optimism that technology-driven productivity gains can support sustainable growth throughout the remainder of the decade. Wolterskluwer. Subtopic: Corporate treasurers are increasingly evaluating digital asset infrastructure, advanced liquidity tools, and AI-assisted forecasting systems as part of long-range planning initiatives. Governance and regulatory credibility are becoming major factors in procurement decisions. Institutions able to demonstrate strong controls are finding greater acceptance among enterprise customers. Financial leaders are placing renewed attention on operational resilience following several years of rapid transformation. Technology investments are increasingly measured against profitability rather than innovation alone. The result is a more mature financial ecosystem capable of supporting expansion while maintaining oversight. This institutional maturity may define the next chapter of global corporate finance. Wolterskluwer. 2. Fintech and RegTech. AI regulation enters its enforcement era, the compliance deadline that could reshape fintech forever. The fintech sector is entering a period where regulatory readiness is becoming just as important as product innovation. Recent developments surrounding AI transparency obligations in Europe highlight how regulators are moving from policy discussions toward implementation and oversight. Firms deploying AI-driven customer interactions, automated advice, or algorithmic decision systems face increasing expectations around disclosure and transparency. The objective is to strengthen consumer trust while ensuring accountability. Regulatory clarity may initially increase compliance costs, but many industry observers believe it will ultimately support broader adoption of responsible AI technologies. Fintech companies are therefore redesigning governance frameworks and compliance workflows. The market is rewarding organizations capable of integrating innovation with regulatory discipline. The Tech Advocate. +1. Global regulatory trends reveal a common theme. Governments want innovation without sacrificing transparency, fairness, and explainability. Financial services providers increasingly recognize that compliance cannot be treated as a final review step. Instead, regulatory requirements are being embedded directly into product development processes. Automated monitoring systems, real-time audit capabilities, and explainable AI features are becoming essential components of modern financial platforms. This evolution is helping create a more sustainable operating environment for digital finance firms. Companies that effectively align product design with regulatory expectations may gain meaningful competitive advantages. Regulatory technology itself is emerging as a growth market. The Tech Advocate. +1. For investors, the most important takeaway may be that regulation is increasingly acting as a catalyst rather than solely as a constraint. Clear frameworks often reduce uncertainty and support broader institutional participation. Fintech businesses able to demonstrate trustworthy governance practices may attract greater enterprise adoption and investment flows. The next generation of digital finance may therefore be built as much on transparency as automation. Firms that successfully navigate this transition could become foundational infrastructure providers. The industry's maturation signals a new phase in the evolution of financial technology. Wolterskluwer. +1. Subtopic. RegTech providers are experiencing stronger demand for model governance, transaction monitoring, AI documentation, and automated compliance reporting solutions. Financial institutions increasingly want tools capable of creating audit-ready decision trails. Explainability is moving from a desirable feature to a regulatory expectation. Organizations are looking for scalable systems that reduce manual compliance workloads. This trend is encouraging investment in specialized software platforms. The convergence of AI and compliance technologies appears likely to continue. Strong governance may become one of fintech's most valuable assets. Wall Street's economists. 3. Risk management and insurance. From reactive protection to predictive intelligence, why AI is rewriting the rules of risk. Risk management frameworks across banking and insurance are undergoing significant transformation as advanced analytics become more widely deployed. Industry developments indicate growing use of AI-powered underwriting, claims analysis, fraud detection, and operational risk monitoring. Organizations are shifting from historical analysis toward predictive insight generation. This allows institutions to identify potential vulnerabilities before they become material events. Improved data integration is enhancing visibility into complex and interconnected risks. The ability to respond earlier could help reduce losses while improving customer experiences. These capabilities are becoming increasingly important in a digitally connected economy. Fintech. +1. Insurance technology providers are expanding the use of intelligent automation across the policy lifecycle. New platforms emphasize faster claims handling, improved underwriting decisions, and more personalized customer engagement. At the same time, insurers face growing pressure to manage model risk responsibly and ensure transparency in automated decisions. Human oversight remains a critical requirement despite rapid advances in machine learning. Successful firms are balancing efficiency gains with governance controls. Data quality, auditability, and explainability remain top priorities. The result is a more sophisticated approach to enterprise risk. Fintech. +1. The broader significance extends beyond insurance carriers. Banks, investment firms, and corporate treasury departments are adopting similar approaches to operational resilience and fraud prevention. Advanced risk intelligence increasingly serves as a strategic advantage rather than merely a protective measure. Organizations capable of identifying emerging risks early may achieve stronger performance during market volatility. This shift supports a future in which risk management contributes directly to business growth and innovation. The sector is evolving from protection toward proactive opportunity creation. Use a daily report. +1. Subtopic: Predictive risk intelligence platforms are becoming central components of enterprise decision-making. These systems analyze large volumes of operational and transactional data to identify developing patterns. Fraud detection continues to be a major investment area. Claims automation and underwriting modernization are also attracting attention. Insurers increasingly view AI as a tool for enhancing both efficiency and service quality. Better data infrastructure remains fundamental to success. The institutions that master predictive risk management could help define the next era of financial resilience. Fintech. +1. 4. Investment and capital markets. Institutional capital follows digital infrastructure, the quiet revolution building tomorrow's markets. Investment professionals are increasingly focused on the intersection of technology infrastructure, digital assets, and market efficiency. Recent industry commentary highlights growing institutional interest in tokenization, stablecoin ecosystems, and new financial market architectures. While speculative enthusiasm has moderated, infrastructure-oriented development continues to attract serious attention. Investors are assessing long-term opportunities linked to settlement modernization, digital custody, and programmable financial assets. Market participants increasingly favor practical utility over hype-driven narratives. This shift reflects a broader maturation process within capital markets. Institutional involvement remains a powerful force shaping future adoption. Finextra. +1. Another notable trend involves the expansion of AI-enhanced market intelligence and portfolio analytics tools. Asset managers are using machine learning to identify risks, optimize execution strategies, and improve decision support systems. Enhanced computing capabilities are increasing the volume and complexity of data available to analysts. Investors are seeking differentiated insights capable of improving performance while maintaining risk discipline. The combination of advanced analytics and market data continues to reshape portfolio construction methodologies. Firms that successfully integrate these capabilities may achieve meaningful competitive advantages. Technology and capital markets are becoming increasingly inseparable. Use a daily report. +1. Longer term, emerging technologies such as quantum computing remain on the strategic radar of major financial institutions. Although commercial deployment remains a future objective, preparation efforts are already underway. Financial organizations recognize that future computing breakthroughs could significantly alter modeling, risk analysis, and optimization capabilities. Combined with AI and digital asset innovation, these developments point toward increasingly sophisticated capital market ecosystems. Investors continue balancing near-term discipline with long-term technological ambition. The future may be built gradually, but foundations are already being laid today. Finextra. Subtopic: Capital markets are increasingly rewarding firms that combine technological capability with operational credibility. Investors continue to seek scalable business models supported by strong governance. Digital infrastructure is becoming a valuable investment theme. Stablecoin and tokenization initiatives remain areas of active observation. Advanced analytics are increasingly embedded within investment workflows. Efficiency, transparency, and resilience are recurring themes. The market's next growth cycle may emerge from the convergence of finance and intelligent infrastructure. Finextra. +1. 5. AI and data analytics in finance. The rise of the intelligent financial institution, how data becomes the new balance sheet. Artificial intelligence is moving beyond experimentation and entering core financial operations. Industry leaders increasingly describe a shift from isolated pilot projects to enterprise-wide deployment. AI systems are supporting fraud prevention, customer engagement, compliance monitoring, investment analysis, and operational efficiency initiatives. Organizations have discovered that success depends not only on algorithms, but also on governance, data quality, and infrastructure readiness. Institutions with strong data foundations appear better positioned to extract measurable value. As adoption broadens, attention is shifting toward trustworthy implementation. Scale and discipline are becoming the defining characteristics of successful deployments. Use a daily report. +1. Data analytics capabilities continue to expand across the banking, insurance, and investment sectors. Firms increasingly rely on real-time insights to improve decision-making and customer experiences. The ability to connect previously fragmented information sources creates opportunities for more personalized and efficient services. Organizations are investing heavily in cloud architectures, automated workflows, and advanced monitoring systems. This environment supports continuous learning and rapid adaptation. The trend suggests a future where finance becomes increasingly predictive rather than reactive. Intelligent operations are gradually becoming a baseline expectation. Net. +1. From a futurist perspective, today's financial AI investments may become foundational infrastructure for tomorrow's economy, including increasingly complex global and perhaps even off-world commercial networks. While such visions remain long-term, the underlying requirements of trust, transparency, and resilient data systems are already being built. Human-centered design remains essential as automation expands. Financial inclusion, accessibility, and better decision support are emerging as major objectives. Institutions that align innovation with societal value may enjoy the most durable success. The intelligent financial institution is no longer a concept, it is becoming a reality. Net. +1. Subtopic. Industry leaders increasingly argue that data infrastructure must precede successful AI implementation. Clean, governed, accessible data remains the fuel behind advanced analytics. Organizations continue modernizing systems to improve visibility and control. AI adoption is expanding from experimentation into production workflows. Regulatory scrutiny is encouraging stronger governance practices. Trust remains central to long-term success. The institutions that master both data and governance may define finance for the remainder of the decade. FinTech Profile. Video description. Welcome to Enterprise Finance Daily, your AI-powered briefing on the forces reshaping banking, capital markets, insurance, fintech, and financial intelligence. Today's forward-looking August 10, 2026 edition explores institutional banking transformation, AI regulation in fintech, predictive risk management, evolving capital markets, and the rise of intelligent financial institutions. Designed for finance professionals, investors, executives, analysts, and decision-makers seeking signal over noise.
Geotags.
Hashtag banking news, hashtag finance news, hashtag corporate finance, hashtag investment markets, hashtag capital markets, hashtag fintech, hashtag regtech, hashtag risk management, hashtag insurance industry, hashtag artificial intelligence, hashtag financial AI, hashtag digital banking, hashtag stablecoins, hashtag tokenization, hashtag digital assets, hashtag enterprise finance, hashtag market insights, hashtag financial services, hashtag data analytics, hashtag institutional investing, hashtag treasury management, hashtag compliance, hashtag financial innovation, hashtag wealth management, hashtag economic outlook. Base thumbnail. Text, Finance 2030 starts now. Visual. Futuristic city skyline, glowing financial charts, AI neural network overlay, banker silhouette overlooking digital markets, blue-gold color palette. Thumbnail A. Curiosity. Text, banks are changing faster than you think. Visual. Split screen showing old bank vault versus futuristic AI command center. Thumbnail B. Urgency. Text, the $1 trillion finance shift has begun. Visual. Red upward market arrow. AI circuitry, global banking network map. Thumbnail C. Opportunity. Text, 5 financial trends smart investors can't ignore. Visual. Futuristic stock exchange floor, holographic data streams, optimistic sunrise horizon. Estimated narration length, approximately 10 to 12 minutes at standard Microsoft Neural Voice read-aloud speed.